So today we're diving into the Cardano ecosystem. And, there's this quiet revolution happening under the surface. Developers are tackling some of DeFi's most expensive, most painful growing pains, and the solutions they're building, they could seriously change how all of us interact with decentralized finance.
But to really get a feel for what's at stake, let's start with a question. A pretty startling one, actually. Imagine for a second you're making a big trade, say $100,000, between two stablecoins. How much of that cash could you possibly lose in a split second? Not because you made a bad call, but just because the market wasn't working right. Well, the answer, it's going to shock you.
And look, this isn't some theoretical what-if scenario. This actually happened. As Surge Cardano pointed out, someone experienced 6.5% slippage on a stablecoin trade. That means $6,500 just gone, vanished, all because the market wasn't deep enough to handle that order. This is the exact problem that developers are now laser-focused on solving.
Yeah, losses like this is what we mean by DeFi's high-stakes growing pains. It's a sign that the ecosystem is just expanding at this incredible breakneck speed. And these challenges, they are the very things driving the next wave of innovation.
So in this explainer, we're going to follow that whole story. We'll start with those growing pains, then get into the mission for what's called deep liquidity. We'll look at how a truly seamless user experience is being built, explore the absolute frontier of new DeFi models, and then, of course, we'll look ahead and ask, what's next?
All right, so where do you even start to fix this? Well, it all begins with the mission for deep liquidity. I want you to think of this as the bedrock, the absolute foundation for the whole ecosystem. Because without it, DeFi just can't scale, period. Let's really break down what slippage is. So when a trading pool has thin liquidity, which just means there's not enough of an asset sitting there ready to trade, a big order can completely throw the price out of whack. You end up getting a way worse deal than you expected, and that's exactly where those massive, painful losses come from.
And this slide, wow, it really puts it all into perspective, doesn't it? That insane $6,500 loss, that's the reality of a thin market. But the goal, where everyone is trying to get to, is a market with deep, stable liquidity. Then, that same trade should only cost you about 0.3%, maybe $300. I mean, that's the night and day difference between a broken market and one that actually works.
So how do we get there? Well, projects like Polstacks are basically writing the playbook. It's really a back-to-basics approach. You got to attract the serious liquidity providers with good incentives, get people excited to trade by offering great pairs and a smooth experience, and then build those key integrations so you become a core piece of the whole ecosystem's infrastructure. And hey, this isn't just theory. It's already happening. If you look at lending platforms like Surf, we're already seeing around 5 million ADA available for people to borrow. Now, for an ecosystem that's still growing, that is a really significant pool of capital. It's that critical first step towards crushing the slippage problem for good. But liquidity is only one half of the puzzle. You could have the deepest pools in the entire world, but if your platform is clunky, confusing, or slow, nobody's going to use it. And that brings us to the next big mission, building a truly seamless user experience. A perfect example of this is Strike Finance. They just launched their V2 mainnet, and what's their focus? Low fees, lightning fast speed, and an advanced order book model. Now that's just a fancy way of saying it's a more traditional, more precise way to trade. Kind of like what you'd find on a major stock exchange. It's all about making the experience feel professional, responsive, and just efficient. This jump from Surf V1 to V2 is a perfect snapshot of the evolution we're seeing everywhere. We're moving from simple things like fixed interest rates to more responsive, dynamic rates. We're going from isolated lending pools to multi-collateral pools, and from basic revenue sharing to way more sophisticated time-based rewards for lenders. You can literally see the technology getting smarter right in front of you. And the tools for building these next-gen apps, they're getting some serious traction. Take Indigo protocol, for example. It helps create synthetic assets, so tokens that can mimic the price of real-world stuff like stocks or gold. Their developer packages were downloaded over 1,700 times in just 2 weeks. It's so clear that developers are lining up, eager to build with these powerful new tools. Okay, so this brings us to the really fun part, the frontier. Some projects aren't just making existing models better, they're inventing entirely new ways for us to interact with DeFi. This is where things get really interesting. One of the most mind-bending concepts out there is intent-based DeFi. Now, the idea is actually pretty simple, but it is so powerful.
Instead of you having to manually find the right trading pool or the best lending platform, you just state what you want to do, your intent. Then a whole network of solvers competes to find the absolute best and most efficient way to make it happen for you. A project called Pondora is pioneering this exact model. So you create your intent, but, and this is the killer feature, your assets never get locked up. They stay totally liquid right in your own account. And that means you can make those same assets available for multiple different opportunities all at the same time. This is a total game changer for capital efficiency. And that's not the only frontier. The whole idea of integrating artificial intelligence, it's moving from sci-fi to reality. Right now, developers are using protocols like Indigo to build smarter loan systems, more efficient ways to use leverage, and even intelligent routing for trades to find you the best price. AI-native DeFi is officially here.
So we've gone from fixing these really fundamental problems all the way to building entirely new, futuristic models. With all this incredible progress, there's really only one question left to ask. What does the future hold?
A roadmap like the one from Strike Finance gives us a pretty powerful glimpse. I mean, just in the next 1 to 2 months, they're planning a mobile app, Solana support, AI-guided trading, and fiat on-ramps to make it easy to get your money in and out. And that's not even the big stuff. By the end of this year, they're aiming for their own chain and a full V3 release. The pace is just relentless.
So the narrative is crystal clear. The Cardano DeFi ecosystem is on this incredible journey. It started by fixing the painful fundamental problems of its youth, and now it's pioneering these sophisticated new models that are just pushing the boundaries of what we thought was possible. It's literally maturing right before our eyes. And that leaves us with one final thought to chew on. As DeFi gets faster and smarter and more liquid, the conversation starts to shift. It's no longer about just fixing problems. It becomes about creating entirely new financial possibilities we haven't even dreamed of yet. The question is no longer if these systems will work, but what incredible things we're all going to build with them next. The evolution is happening right now, and believe me, it is just getting started.